Hi, once again, I'm back, Kaushik Chatterjee. In this video, we are going to discuss the second step to create your portfolio. Already you have discussed the first step. If you have missed out, just go and watch this first step. How to create your portfolio, where you have already discussed even some kind of investment, what set of investment. Now here we are coming. The second step is very, very important when somebody is going to invest even newly or somebody already invested. The kind of risk, what you are going to take, the risk tolerance level. What is your tolerance? That is the most important thing when you are going to invest, even in mutual fund, especially. So here in risk tolerance, again we have to keep even three things in mind. First, what is your comfort level to take the risk? That is very, very important. We'll come and discuss. Second is what class of asset you are going to take the risk tolerance. And third, not first, not second, a mix up of things and how you're going to mix up this asset even for your creating your portfolio, even to mitigate even your risk tolerance. Typically, if you look out, it is all about diversification. So these three things are very, very important. Even somebody already invested, somebody is going to invest, whatever the scenario, you have to keep in mind mutual fund is always even a risk appetite. So it is your money, you have to decide what extent you are going to take the risk. And that is what you have to understand the tolerance level of your risk appetite. So here in the first level, if I look out, the what level or what limit even you can take the risk. So today I'll just give you a simple example. Let's say I've already invested, let's say 100 rupees. I'm just giving an example. On this 100 rupees, even the market is not even performing good, or let's say if I'm not even going to get the expected returns. So what extent even I can take the risk? What extent even I can lose my money? That is the first thing, and it is your comfort level even you have to decide. Now the second point, if I come back, that is how to choose even your even class. Like fund already you have discussed in the first step. You can go and you can watch the SIP, then it is your lump sum. That is your investment. But here I'm talking the risk tolerance means whether I'm expecting a huge returns taking by high risk, that is typically your equity market, as you know, or maybe if I'm, let's say, a conservative person, or if I'm looking some kind of conservative even investment returns, so I may go out for a debt fund or maybe a hybrid fund. So depends, maybe I'm younger, maybe I'm going to take even higher risk. If I lose more money, I do not have any effect on this. So in that way, if you are thinking, so you can definitely you can go for equity kind of investment, or you can choose the equity class of investment. But let's say if it is somebody, let's say a mid age, around 50 or more than 50, or let's say somebody is more than beyond that, even money is very important. Whatever even they have already earned, even that entire even lump sum amount they have put it. For them, even you have to understand whether I'm looking to take even a high risk or whether I'm going to take a conservative risk. And that you have to choose it on your debt and your hybrid fund. So these are the two class even you have to understand. You have to decide in the beginning, because based on that one, you are going to also mitigate. You are going to also even understand and also even tolerant in your risk level. Now the final one again, if you look out, this is the best intelligent way to invest, or let's say intelligent way to understand even your portfolio, even take a risk tolerance also, and that is all about your hybrid kind of investment in one way, or let's say equity kind of investment in one way. So what I mean to say, it is kind of a 50-50 risk you are going to take. So if, let's say, if I'm going to invest even 100 rupees, so that 50, even irrespective of your age, irrespective of your goal, whatever already you have discussed in the step one, even your step uh, investment. So here in this risk tolerance, again, if I discuss, and on the third step, if I discuss in this risk tolerance, so I can divide my investment, or I can divide my fund even half of this on the debt fund or hybrid, where I can get even some kind of conservative returns, or I can get even another even high risk, maybe on the high tolerance, even I can also adjust, even that is all your equity risk. So let's say I'm just going to give you a typical example. Let's say if I'm going to invest even 100 rupees, so 100 out of 100 I'm going to invest, let's say 50 rupees in the debt or hybrid fund, while let's say my money will not even go too much on the lower, or maybe too much on the high risk. On a moderate, I am going to get, let's say, 8, 10, 12% of returns. But whereas if I look out even another 50 rupees, if I'm going to invest, let's say in my equity market, it might go even 2 rupees, 2% also, it might go even 20 rupees also. So this is like on a lower side also, it will go too down, on a higher side also, it might go even too high. But if I look out in the I mean same way, on the differentiate, if I look out, so that way I'm going to get, let's say, 10 to 12. And here if I'm going to lose, let's say, even money, or if I'm going to get even lower even in returns also, let's say in 2%, so put together I'm not going to be even too huge loss. At least 7 to 8% average I'm going to get. If it is going up, definitely you are the luckiest one. I don't need to even calculate, and you always expect that kind of returns. But yes, in this step we are going to only understand, as we have discussed already, these three steps in this risk appetite. On this risk tolerance, you have to decide whether you want to go what level, what extent. Based on that one, you have to choose your fund. It is equity, it is debt, or it is hybrid, or else you can go for the diversification, 50 debt, 50 even equity, so that altogether you will get a conservative, at least a base return, at least a average return. So again, it is your money, again it is your decision, again it is your goal, again it is your investment. I'm just here with my all 19 years experience, give you all this experience, opinion. It is your job to choose. It is your job to decide with your financial consultant. Anytime, any questions, yes, if you ask me, I'll be the happiest one to reply. But yes, end of the day, it is your decision, your money. Thanks. Thanks for watching.